Hello, this is Nedi, the Forex coach. In today's video, we're going to be looking at a very unique way of analyzing the market, and that I call the top to bottom analysis, top to bottom approach to analyzing the market. And of course, when you are conducting either a technical or fundamental analysis, your objective is to arrive at a trading opportunity, making a decision whether to buy that particular currency pair or to sell it. And over the years, I've come to realize that the top to bottom analysis gives you a wider and broader view. And of course, when you move from one time frame to higher time frame, what actually is happening is that you are exposing yourself to more data that at your disposal that you can analyze and interpret and take your decision. The more data that is available to you to take your decision, the more accurate that your trading decision may likely be. So is a very wonderful approach. I know a lot of you out there, you are scalpers, you trade the market using the lower time frames, looking for small price actions. But irrespective of what kind of trader that you are, whether you're a position trader or you are trading for an institution, all right, or you're a retail trader trading your private account, is important that you have a broader view of the market. Actually, conducting that top to bottom analysis gives you, a sense of market direction. And if you could add some fundamentals, some fundamental information and knowledge, you could dig a little bit deep to find out what actually is driving the price action fundamentally. You will stand a better chance of winning your trades, and you'll even be more confident when there are some shakeups in prices. In the market, your emotions will stabilize because you already have an idea of the overall price direction. It's important that a trader has an idea of the price direction. Okay, you must have heard the saying that the trend is your friend. It's easier to trade in the direction of the trend, and one sure way of knowing the overall trend is you viewing the market from a higher time frame. In this video, I'm going to be conducting that top to bottom analysis using one currency pair, the USD-CAD. That's the dollar card. All right. I'm going to share my screen so we can go. All right. This is the monthly time frame for this currency pair. This is a monthly time frame for this currency pair. I think this started from 1993 here. Okay, this particular broker could only provide data from 1993. You can have more from some brokers. Okay, whatever. This is the whole. You don't need to scroll. You can see from 1993 to date is just available to you. Just like that. Okay, so you can observe price movements. You can observe price movement here. You can see the price made, a bullish impulse from 1993 to around 2000, thereabout 2002, and it peaks at this level. All right. After that, there was another impulse, but this time a bearish impulse, and we can observe these equal lows here, or what some people call double bottom, which is actually a sign of reversal. It's a reversal signal. All right, you can see that's what actually caused the market to reverse at this point. It did this low here, and then another equal low right here. So we can put some line here. All right, so again, markets after hitting this equal lows pushed up again, making another bullish impulse. Now we're going to be looking using the Fibonacci retracement tool to at least have an idea of levels where corrections, price corrections, and turning points are located. So I'm going to use the Fibonacci retracement tool from top to this low, all right? And most turning points appear or happen around the 5061.8 handle, 5061.8 handle. So from here all the way to this place, you can see that at the 50, this between 50% and 61.8, that's around here. Okay, that gave this price a spring to push downwards to make this equal bottom. And now we're seeing another impulse from here to this level. So you're going to be looking at maybe checking the retracement levels and know where exactly the market has gotten to. Okay, let me delete this first so we don't have the this stuff plot. All right. All right, from here, bottom to top. All right. You can see price retraced again to 50 mark. That's here. Retraced again to this level here. There's a 50% level. All right, and it kissed this 50-day moving average. Okay, on my screen here, I use the 21-day, that's the orange, 21-day exponential moving average, and the blue is the 50-day exponential moving average. I see prices moving into that space. Is actually a measure of a retracement zone. And you can see here, price made this bullish impulse and retraced 50% of that move, within that window. So here, you can, if you observe very closely, you can see two equal lows here. I'm going to expand this. All right, you're just looking, observing, things. Okay, you can see two equal lows, which suggested at this time, use this, which suggested that the price is going to go up. Let's see what the market is doing here, looking at the retracements and also the wave analysis, corrective waves playing, some role here, happening here. I can see this market move from here to this point, retrace back to this level, and this is more like a zigzag kind of retracement. I'm going to remove the Fibonacci retracement tool again. Now I want to view this move downwards as an impulse and this a correction. So let's put the Fibonacci again from here down to this place. Again, the market retraced 50%. It got again at 50% retracement level and made a lower high. This is a high and here is a lower high, all right, before it pushed all the way down to this and make this double bottom or equal lows. Okay, price again is seen to move from here to that same level, and that's why I put that line and retrace into this retracement zone, the space between the 21 EMA and the 50 EMA, and pushed back up, establishing a zone, a supply zone. You can call this also a resistance zone. Okay, this was the first test of price. Okay, and here is the second. So here is established as a level of resistance or supply zone in our context. And here also is another key level, okay, because you see price retraced to the 50% retracement level and made that same move to this place. came back into the retracement zone space between 21 EMA and the 50 EMA and got the spring up back to the supply zone. All right. All right. So we have these two corrective waves. This one corrective wave here, 1, 2, 3, which you can denote with just a straight move. You know, price does not move in a linear form like this. So you see this red arrow. Okay, the price moved there, and then from here again, it moved back to this zone. And you can see it did not go straight. It did this zigzag 1, 2, 3, and then from here it moved 1, 2, and 3. Because you're careful looking at candlesticks formations and also key retracement levels using the 21-day EMA and the 50-day EMA, and of course with the Fibonacci retracement tool. All right, I remove this so that we can have a cleaner chart. All right, when price hits that zone, the supply zone, it is seen to push down. This time it was in a very strong hit back to this low, making here a strong established demand zone, or what you can call support zone. Okay, when it got here, price bounced. You can see there's a candle pattern on this level. You can see this candle pattern here. This actually is an engulfing, is a bullish engulfing pattern that saw market price moving up. And this is where the current market level is. Take note of this level here. Price touch here, 50% retracement, and retested here. So most likely there will be a reaction when market price gets to this level. Okay, this is the first price action from supply zone to demand zone. It did a zigzag to get there. It did another zigzag to get here. This time around it went straight, and we're expecting price to move to be bullish. We're expecting market price to be bullish. This is expected. There could be a possible retest of this zone, possible retest of this zone before the price can be expected to crash and break out of this structure. So at this point, market is seen to be trading sideways, and all these are happening on the monthly time frame. You can see it's happening on the monthly time frame. All right, so let's look at this zone. This is a zone in question. What are we seeing? We've established a supply zone and the demand zone. Price bounced off, and this happened sometime April 2021, just about a year ago. When the price hit the supply zone and is seen to move back to the demand zone seemed to move back to the supply zone. All right, let's check how many pips from in between. Oh, this is huge. 2,700 pips. 2,700 pips, and so far is done. So far is done about 1,130 pips. So what do you think? All right, from this, you can have an idea. Price is trading sideways in a range, about 2,700 pips range on the monthly time frame. And price has bounced off from a strong demand zone and is heading to a supply zone, and is done that journey in about 40% of that journey. And there is a window of about 600 pips into the next key level. We are marking this level because price, anytime price enters here, there is a kind of reaction. You can see that here. And then we're expecting a reaction when price gets to this level. So are we going to see this pattern play out into here? Market price retrace to this point, get here, then before the structure is broken. So all these are speculatives. Right now, we're going to move to, let's take it straight to the daily time frame. All right. To see more details. Now we are taking it closer. We're taking it closer. We have an idea. We have a bias that there is a possible price action from this zone where market has price has left. That's the demand zone here. All right, and price is seen moving this way. You can see something happening here. Okay, price seems to be trading sideways, but gradually moving north. It seems to be trading sideways. You can see it gradually making a bullish kind of displacement. All right, so let me reduce this. Okay. All right, so let's look at what the price action is doing here. From this point, you can take it to this level. You retrace here. This is about 61.8 level of retracement, made an equal high. Okay, came all the way back. Okay, to this level. So we count this. Okay, you see these two waves. Then market got here, another high, returned to this level, and we're expecting it to push back up north, all right, into this zone. Something is cooking here. So our expectation is price to move here. But now something is happening at this level. I can see equal, can see now, let me like this border here. Price has been trading almost sideways at this level. This USD card. All right, price has made a high, and this is an equal high. That's why it is making this kind of correction. And of course, the overall direction here is bullish, even though it seems like it's doing some sideways kind of trading, but gradually tilting up, making higher highs, you know, and higher lows in that journey. Okay, this is the daily time frame. It's becoming clearer. Our expectation is price moving. This is a bullish impulse here, and followed by a set of correction looking more like a flag, you know, a pattern, chart pattern, or maybe a falling wedge, maybe a falling wedge. All right, whichever describes it better. And since there is a bullish impulse before this correction happening here, there's a correction happening here. Let me clean up that particular area. There is some correction happening here, inside here. And we said this looks like a flag. It also looks like a falling wedge. So before this correction, there's an impulse. Most times, when price makes an impulse in a particular direction, when price makes this impulse and does any kind of correction, maybe like this, it moves, it continues in the direction of the previous price action. This is what is seen most times. That's what price, you know, does a lot of time. It does that. It does that. So it can be any kind of correction, but you have to identify an impulse, a sharp drop or rise in price in the direction of the trend. And of course, the direction now is bullish based on all our analysis coming from the monthly time frame. All right, it made this kind of an impulse this way. All right, and it's correcting like the flag. This what's, and then we expect it to continue in the direction of the previous price action. This is what I expect to happen here. This is what I expect to happen here. So the reason we drew this line, this impulsive price action, there's a correction going on here. Price is expected to move, but at this point, it might be a little bit difficult for you to locate a trading opportunity. Okay, So of course, we are still on the daily time frame. We're still on the daily time frame. So from daily, we'll move to 4 hours. Move to 4 hours. All right, this is the current area, the price. We see price. All right, you can see this correction is a little bit clearer now. Okay, price moved into this zone and is making these corrections here. So you can see a zigzag. You can see this zigzag wave here. It pushed this, return about 1.8%, got to a low, all right, and moved all the way to this level, and now is seen to return back maybe to this point. So the first thing we're going to do is to, let me remove this, is to observe this as an impulse. We're seeing this as an impulse. So I'm going to use the fib retracement. So most retracements get to either 50, that is here, the 50, between the 50 and, this is my experience, okay? Most of the retracements that will swing back must happen within this window. That's the 50% and the 61.8% to get enough momentum to push back up. So we can see that this price, the price for the USD CAD is expected in the near term to be bearish. So the expectation, at least this point, this is a low, there's a low here, though we're expecting it to happen around this area, So between this low and this low, we're expecting this price to push down, and that is the potential of about 130 pips. Between 130 pips, we're expecting this bear price to move down. 130 pips hit the 50 or the 61.8 retracement, level, and gets enough spring power, momentum, and push up to produce this second impulse that we are anticipating here. This second impulse here. So this wave got to be complete. Most times inside a wedge or inside a flat correction, you will just see 3 waves. Sometimes it can be 5. As we're seeing here, this is the first one, 1, 2, 3, 4, and it's completed the 4th one, and it's now going for the 5th. And the 5th one will take it right into the 50% or the 61.8% retracement level, from which we can expect any moment around this area. We can expect price to do the next impulse, all right? To do the next impulse. So these 4 hours, let's scale lower to the 1 hour time frame. We can see more details. We can see more details now on this corrective wave. You can see it here. Okay, you can see this price move 1, 2, okay, 3, and at this point it did 5 waves. You can see. Let me use this from here. This is 1. See that? I actually took this trade today. So we at least we have seen this. So let me remove this one. So we are focusing on this last push up, and I'm going to use the Fibonacci retracement tool from here down to this level, and you can see this hit this 61. Around here is the 61.8 retracement that we see here. this is seen now as an impulse and this is a correction. All right, and it happened exactly at 61.8 retracement level. When price retraces between 50 and 61.8, it gets a lot of momentum. It gets a lot of momentum to move in that direction. And yeah, as we are seeing now, price has completed this 5-wave. One can also at this level use can draw a trend line here to denote areas of areas that you can enter a trade. So like here, I'll put this circle here. All right, here. Okay, around this area. A breakout from here. Market closes today. So breakout from this place, we'll see price pushing at least all the way from here down. Can be to this level, resistance level, and this you can see a low here. So price can get to this low, price can get to this low, price can get to this low and stop. Of course, we're expecting it down. Remember, our 61.8 retracement level is around here. It's around this area. It's around here. So we're expecting this to push all the way from here to this point before making the final lap of the impulse to the overall demand zone, supply zone, that's resistance level. And from here, price is expected to fall to break that initial sideways structure, ranging structure we saw on the 1 hour time frame. All right, so I can improve on this. Yes. All right, I traded this, I traded the market, I followed it from here up to this level, and now also followed it all the way down to this point. So we can see a very perfect trend line drawn here, and price is seen to break this trend line. All right, so you can scale down again to in a 30 minutes time frame to see some structure. All right, okay, you can see something. Price made an impulse here, this is a correction, and then it's making another impulse. You can see these 3 candles forming here, and of course this is on a key level, this is a trend line, okay, and we're seeing something. So if this closes, if the market closes with these 2 candles, it suggests to me that price is going to go more, going to do more bearish, run at the opening of the market on Sunday. All right, you can see how we started from the higher time frame, get a knowledge of the direction, and of course using the Fibonacci retracement to look at various possible turning points, in the market. And we have an overall view. Market is this particular USD card of the monthly and the weekly time frame is trading between a level of support and resistance, and is expected to break anytime soon because it has touched both ends on monthly time frame twice. So the third touch, which is what we're expecting in the bullish run, even though in the short term price is bearish, but the overall direction for USD card is bullish for them now before we enter into the bearish run. See the level, try to go up. Oh, it's too far using the, okay, yeah, see it here. So this is the zone. This is that zone that price is expected to hit after it has completed the 61.8 retracement handle. All right, in this bearish move that is currently happening now. All right, I hope this will help you. You can apply this to any currency pair. The first thing, move to higher time frame to see an overall picture, see more data, know the overall direction, that the market is going and what structures that is forming based on experience, know what next that the price will do. And of course, use your Fibonacci retracement tool to see possible turning and points as the market journeys in that direction. As you know, price does not move in a linear way, moves in waves. And of course, applying some knowledge of the Elliott wave theory, the zigzag corrections, the flat corrections, and all of that, and chart patterns, various corrective structures that we are seeing. And we also were able to draw some trend lines that helped us to identify this particular spot. This is where the current market price is now. So a break from this structure, from this trend line, we see price fall further, and we expect it to get to this level around here. This is a 61.8 retracement tool of the initial impulse that has happened in the market. So thank you so much for watching. If you like this video, if it makes sense to you, I'd like you to hit that like button, subscribe to our channel, and don't forget to click on the alert bell so you can get alerts next time we put up another video. Thank you so much for joining us today. I will see you again in our next video.